Okay, there are plenty of stocks to talk about. By the way, today Honasa also comes out with its earnings. So Mama Earth, the parent company Honasa, comes out with its numbers. So keep an eye out on that. But plenty of other stocks to talk about. Reema is here first up to tell us about TCS and why we should keep that on our radar. Reema, over to you.
Thanks so much for that. So the company announced yesterday that they will be making an exceptional provision of $125 million when they report their Q3. Now, this provision dates back to a case way back in 2014 with a company called Epic Systems, where TCS was implementing a healthcare software for them, and Epic Systems had alleged that there was misappropriation of intellectual property. So the case, there's been a lot of back and forth between various district courts in the US, but now this appears to be final because TCS had appealed in one of their district courts and has been rejected. So they will be making a payment of $125 million as an exceptional provision, which will appear on the books in Q3. So that's negative news, and approximately this amount is about 2 to 3%, 2.5% of the company's full year EPS estimates, according to consensus expectations. So there will be that, hit on that. Back to you.
Okay, thanks a lot for that, Reema. So a bit of a hit to TCS, but Coal India, they had an analyst meet, and in fact, the commentary that came in was quite good. Volume targets, they have laid out 780 for FY24. And for FY25, well, they're talking about 850. The street is a little bit skeptical about the 25 target, but 24, everyone is mostly on board. In terms of e-auction, they're expecting it to contribute close to around 15% of the production. For the first half of the year, it was around 9% approximately. Evacuation focus, that's very, very important because they produce more, that's good, but they need to send that and dispatch the coal that they make as well. So they're working on developing sufficient rail infrastructure to support sales volume growth. And on the cost reduction initiatives, they are expecting the employee count to fall by close to around 5% annually over the next 10 years. And they've achieved close to around 4% over the past 10 years. Now, FSA price hike, some part of the street was hoping for it. But given that it's an election year, it's unlikely that we see FSA price increases. And they have clarified on that. The next 6-7 months, we shouldn't see that. The capex plan for 5 years has been laid out at around 80,000 crores. So roughly around 16 to 17,000 crores on a per annum basis. Most brokerages, they have a buy rating on the stock. The target price has come up for you on the screen.
Okay, well, that's about, the stocks to watch. But there's another stock that we're looking at this morning, which is IndiGo. So let's take a look at that. Green on IndiGo this morning because of the kind of volumes that we've seen in passenger traffic. So the stock is up about 15% in the past 6 months, and the stock is up 44% in the past 1 year. The domestic traffic has hit a record high for the third straight day in a row. So the data we have for November 20th is that domestic airlines have carried almost 460,000 passengers on November 20th, and that's the highest single-day air traffic that we've got. The Aviation Ministry has tagged it as overwhelming amount of passengers that have flown this time around, and that's something that perhaps could keep a lot of these aviation stocks up and about. Remember, IndiGo has more than 70% market share in monopolistic routes, and overall it has about 60% market share in the aviation industry, so I'm going with green on that stock. But let's toss it to Vivek, who's talking about Texmaco Rail this morning. Vivek, over to you.
Well, good morning. Last evening, Texmaco Rail, told the exchanges that, they were going ahead and launching a QIP. We have access to the term sheet, and sources indicate to us that this particular QIP, the company is looking to raise close to 750 crore. This includes a base size of 550 crore and an upsize option of another 200 crore. The key point is, the indicative price at which this particular QIP is being launched. The indicative price is 129.1 rupees a share, which implies almost a little over 13% discount to yesterday's closing price. So the dilution, if the base size is what is being considered, is 13.1% of the total equity capital. And if the upsize option is exercised, it is 17.86% dilution. Why does the company need funds? Number one, for capex. Company plans to purchase new equipment. Number two, to repay certain borrowing. And number three, for funding the working capital requirement. Going with the red on this particular name on account of the discount being given for the QIP.
Okay, well, Vivek, thank you very much for that. We'll watch out for this one. Allcargo Logistics is the next one. Mangalam is here with details. I think we had volume numbers for the month coming through. Mangalam?
That's correct. So Allcargo Logistics reported the monthly update for the month of October, and this time around it's weak. October is seasonally weak, but this was weaker than that as well because we saw an 8-month low on their overall, less than cargo loads volumes. In fact, we had the month of October 2023 which saw the volumes decline by 4% year-on-year and 3% month-on-month. And this despite the volumes being augmented by about 1.5% on account of the acquisition that the company made in January itself in Germany. So if you take that down, then the volumes are down 6.5%. The company said that October, while it's a seasonally weak month, but they expect near-term demand to be muted as there is no respite in terms of demand conditions in the near future, as a result of which going with red on Allcargo.
Got it. Thanks a lot for that, Mangalam. Well, let's go back to Vivek. Vivek, tell us about some stocks that you're tracking.
Well, quite a few stocks on our radar, on the back of news flow. First on our list, GMR Power and Urban Infra. The company has gone ahead and increased its stake in its subsidiary GMR Energy. The stake has been purchased from its Malaysian partner named Tenaga, and the company's stake now increases to 86.9%, indicating that the company is buying a further 29.14% stake in the company, and for a total negotiated consideration of $28.5 million. So now what actually happens is that the company would be able to fully consolidate the earnings of GL into its own books, and on the account of that, you will see some accretion coming through. The other stock on our radar is NHPC. Remember, on account of the Sikkim flash floods, the important project that the company was undertaking construction on, that is, the T-Staff 6 hydroelectric power project. Now critical head race tunnel works have resumed, so some positive news flow coming in for NHPC. IDBI Bank, some negative news flow. The government has cancelled the bid for appointing the asset valuer for IDBI Bank's divestment. A fresh RFP is to be issued, and the government is also reworking the terms and conditions that qualifies bidders. They're going to relax the norms for this particular divestment to go through. Also, Signature Global, yesterday a large trade took place over there. Aston Capital VCC sold close to 11 lakh shares. Nomura India Investment Fund bought the entire stake from there. And lastly, Ganesha Ecosphere, going with the green on this particular name as well. Company is looking to raise funds. The board meeting is held on November 24th. All options, including a QIP and a preferential issue, is on the radar.
All right, thanks a lot, Vivek, for that. Well, here's a quick recap in case you missed out on any of the stocks with positive news flow. There's Coal India, Interglobe Aviation, GMR Power and Urban Infra, NHPC, Signature Global and Ganesha Ecosphere. While stocks with negative news flow are TCS, Texmaco Rail, Allcargo and IDBI Bank. But there's also a handful of brokerages that we have this morning. And if you want to get your daily dose of brokerage views, Hormuz is right here to give us that lowdown. Hormuz, morning.
Good morning, Sonia. And I'll start off with something that you track pretty closely, that's Tata Motors. And CLSA has come out with a note on that. It has a buy rating on it, and it has a price target of 841 rupees, which is the highest on the street for Tata Motors. And the note is pretty JLR-centric, and it says that JLR reported a 14.1% improvement in retail volumes for the month of October, with UK volumes rising 65% and those in the European Union going up by 29%. And it also says that the third quarter volumes for JLR are slightly lower than the second quarter, but continue to remain at healthy levels. It also mentions that the discounts have risen, but they are not as significant for JLR for them to be worried about. And for the net debt, the JLR's net debt has come down by around 300 million pounds, and it looks set to turn net cash positive by FY25. Now, Tata Motors will also be in focus because of the Tata Tech IPO opening today, and it is also the top performer on the Nifty in 2023 with gains of around 75%. Next up is Bernstein, which has an underperform rating on Divi's Laboratories with a price target of around 3,064, which is a 17% downside from current levels. And it says that the cross reads from global peers indicates that there is continued pricing pressure in generics and inventory destocking at customers, which could affect the order inflow and margins for the rest of the year. And it is because of this that Divi's, unlike its other Indian peers, has not been able to benefit from lower raw material and freight costs. Now, although the management has guided for 2 new custom synthesis projects scaling up in the next few quarters, but Bernstein says that the visibility for them remains very poor. And it also lastly says that the market exuberance for the stock is unwarranted, and Divi's as a stock is up 10% this year, but 7% of that has come only in the last 1 month. And lastly, a pretty interesting note on Varun Beverages that has come from BofA Securities, where it has maintained its buy rating and raised its target to 1170 rupees, which is also the highest on the street. It says that the solid execution continues from the company and significant penetration opportunity also exists, and benign input costs, favorable mix and backward integration should continue to support margins. And interestingly, the management also said that 40% of their existing portfolio now is no sugar or low sugar. And lastly, Varun Beverages is up 55% this year, and it has delivered positive annual returns every single year since it listed in 2017. Back to you.
Okay, all right. Thanks a lot for that, Hormuz. Well, Manisha Gupta joins us as well to tell us what's going on in the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'll start with the crude oil prices, which are trading steady, and this is ahead of the OPEC meeting on 26th of November. Apart from that, it also has to do with the 7 oil companies impacted at the Gulf of Mexico due to oil discharge of almost 1 million gallons. Remember, the prices had declined 16% since the end of September, so that there is some buying and some buying fundamentals as well that you can see in crude. But the real action really is clearly in case of metals there. You have seen the dollar index decline to a 2.5-month lows. The 10-year Treasury yields are trading at a 2-month lows as well, and that has been supportive. China leaving prime rate steady as expected also has been supportive. So you have the copper prices now trading at around 2-month highs. Copper also is taking support from disruption at mines in Peru and Panama. And within the precious metals, it is $2,000 an ounce back for gold. We saw 2% gains for silver, platinum as well. So there is a strong support because of the weakness in dollar and the expectation that the Fed will not hike rates in the month of December now.
All right.
Okay, well, Manisha, thanks very much for that. We'll take a quick commercial break here. We are back. Deven Choksi, Managing Director at DR Choksi Finserv, will join us for a fundamental stock analysis. After that, we'll have the management of Nazara Technologies joining in to discuss the business outlook post second quarter earnings. Stay tuned.